Hello all, good evening. So welcome to today's index analysis. So let's get started first, starting with the end of the day data. So when you look at yesterday's end of the day data, from the FI's perspective, they had shorted the calls. Shorting calls, although the number is pretty small, shorting calls is bearish, and they shorted even more puts, which is bullish. So this is from the FI perspective. Now looking at the prop desk, you find that prop desk they have done a significantly higher amount of index call shorting. So this is definitely very bearish. So they shorted more calls, and then index puts also they've shorted, which is significantly higher than what FIs have done. So this is bullish. I mean, since the magnitude is very high, you can say this is what you can visually kind of think of the intensity. So now coming to the combined aspect of FIs and prop desk, you find that there is a significant uh, you know call shorting, you can see here, and the put shorting also. So this is the overall position from the smart money. So what this indicates, that this indicates in itself that there is some kind of bidirectional nature of move which might come, right? Since the index call has been shorted, which is bearish, and puts also have been shorted, which is bullish. So here itself you get a clue that the move can be bidirectional. It can be either up or down, or it can be down or up. So it can be either way. This depends on the intraday, uh, OI data. So that's how the market played out today. When you look at the clients had done exactly opposite as usual. They had bought calls in a significant quantity, which is again bullish, and they had also bought puts, which is bearish. So the data is pretty much clear that the day would comprise of bidirectional moves. So that's how the market actually played out. So having such a view of EOD helps us to gauge that the move cannot be unidirectional unless and until there is significant one directional move with order flow, and OI of intraday would give a strong hint. But the EOD data of such a magnitude, especially the smart money, indicates that there is bidirectional nature of the move coming. So now, first, let us look at the OI of the. So when we look at NIFTY's OI, so overall, of course, Nifty had more put writing, some almost 1.38 crores of put writing compared to 54 lakhs of call writing. Overall, it is still an increment over the yesterday's positions. There is more, put writing. When you look at overall open interest, you find that it is almost similar. Like the position almost remains similar. In fact, since there's been more put writing, when you look at yesterday to today, yesterday also the PCR was around point 9, and today also it's around point 0.9, with an increment of calls as well as puts. So the option chain from the open interest perspective overall looks even. It is kind of looks balanced, as you can see. But as I mentioned in the thumbnail, how do we get the final analysis of the move? That is the 3 p.m. move, which most of us are kind of fond of taking. So what has to be done is you must just analyze the OI positions which are getting built up in the last maybe 1.5 hour. For example, if I take from 1:30 till before the move starts, move generally starts at 2:45 or 3 o'clock. So generally position should be made before that. Okay, so if we take till before 3 o'clock, this is what we find that from I've taken this rough timeline of 1:30 to 3 o'clock. You can find that there is more call rating, and there is massive put unwinding. So one thing what should be clear from this data is that market is definitely not going to go up because of the put unwinding. The chances of it going down is higher because of the call rating if it is at the top. So that's what happened today. I mean, you can also do the same with Bank Nifty to find the convergence, whether the OI data is converging across indices. So when you look at Bank Nifty also, just pick the same rough timeline. You can take 1:30 for the matter, and you can also take to 3 o'clock. So when you see this, there is only call rating, at 44 100 what showing. But let us make it more precise. You can just take it maybe to from 2 o'clock. Also, you find so hardly in this time frame you find that there's a lot of unwinding which is taken place at the ATM strikes, and there is call writing. So yeah, so this is what the position is. So Nifty's OI data is hinting at some call rating at higher levels, and Bank Nifty's OI data is also hitting the same. So when you find such a data where there is put unwinding taking place and call writing taking place, definitely when the market is kind of going up and it is stagnated, so the final move will come towards the downside. So that's what we saw today. And in fact, since it was FinNifty's expiry also, that also had some context to play. So nowadays, index management has become so crucial that because of expiries, they have to manage all the three. I mean, smart people, uh, smart money is is managing all the three positions. So when you look at 1:30 till before 3 o'clock, you see the same thing. You can find that roughly there is the higher strikes call unwinding is has nothing to do, because those are very OTM positions, so they carry little meaning. But at the ATM there is significant call writing, and of course there is some put writing, but we can see that there is call writing at higher quantity. When you just take it a bit further and you find that the call rating is more in intensity. So this is where you feel that the market would generally not stay at the higher levels for the final move. So such clues can be picked up from the OI for the final 3 p.m. move to be traded. And also this is one way using timestamps was what we can do. And coming to the OI change on the intraday live charts, same thing is visualized here, but it is like you have to be very cautious in observing, because you'll get a mixed data in this time period. You will get after the initial put writing, market went higher and it's kind of stagnated, and you get to see this mixed data which is coming out. Like you find call put writing somewhere. Sometimes you find call writing, you find put unwinding. So you have to correlate. That's call unwinding. So this data is mixed. So there are chances that you might go confused on which direction the market is probably gonna end up with. But when you see in the line graph the overall OI, you also find that the put OI dropped and the call OI just sustained at the whatever level it was. So this also gives a hint in a way. Basically, it's the same thing. Either you see data from this perspective, or this perspective, it's largely the same. It's up to the basically it's convenience for the user to see it in multiple formats and come arrive at some logical conclusion. So this was about only the OI. It was same for on even Bank Nifty also. After the initial up move, Bank Nifty kind of stagnated, and you could see this mixed patch where there was both put unwinding, call unwinding. So but the direction was pretty much clear in the fag end because of the uh, you know put unwinding and call writing. So that is one learning which we can maybe take from today. And coming to the macros also had an interesting clue to give, because the dollar actually spiked up during the intraday course. The dollar started to give a trending move on the upside. So this definitely is very bearish for the equities in general. So dollar going up doesn't add to the strength of equities in general, especially equities from the emerging market. So accordingly, our markets also closed, kind of flat, after, almost giving up the gains, whatever we had made during the intraday course. So the dollar going up is not a healthy sign, we can say. Let's see. Basically, it's going up because of the U.S. debt ceiling, concerns which are taking place. Now, coming at the looking at the Nifty chart, price chart, this is what we discussed yesterday. I mean, let me just hide today's price action and come to the point of what I was trying to discuss. So we were discussing that. So let me remove this drawing also. Now, when you look at this is the recent downswing, right? So for this downswing, the Nifty almost bounced above the point 0.5 level and took support point 0.5 level, and it was kind of resting at this zone, which is around the golden ratio, which is kind of bullish. So until unless it stays above this zone, the price should consolidate here and it should go back and test the its higher target. I mean the previous swing. That's what logically the price should do. And observe today's price opened above the golden ratio, started to go up, and kind of stagnated, not gather much of the momentum, and still closed in that zone. So basically, it's a flat closing, kind of time-based correction which the price has done here. So it is basically a flat closing. The view remains the same, with this price chart. And coming to Bank Nifty also, when we analyze the swings of Bank Nifty, Bank Nifty was moving in this, or respecting this trend line, kind of broke out of this trend line temporarily and still came back and closed, I can say marginally inside the trend line. But when we analyze the swing, I mean, look at the recent swing of Bank Nifty. You can take this low to this high. Basically, what I've done is I've taken this swing low to this swing high. So what happened first? Bank Nifty went and it came back. It took support around the 0.78 zone, which is also decent enough correction. And then it again went back up, crossing all the zones. Still, it has not touched the earlier swing. So it again came back. Took support from the golden ratio again. So it is moving properly in a zigzag fashion, taking supports from all the retracements. And today, yesterday also it was closing above the 0.382 level, which is bullish. And today it went and hit the previous swing target, and it is somewhere resting there. So again, the price is still in a bullish territory. So there's no doubt about it. So except that the price is just done a time-based correction. So this was about the prices. Coming to the order flow, again the order flow also gives the same direction as that of the OI, and in fact it gives a better clue as to whether the move, genuine move would happen or not on any side. As you can see, the first candle's delta was very low, but it was a bullish candle with a delta which is kind of lost almost from the negative min delta of 25k to 4k. It lost around 20k of delta, so which is kind of positive, uh, because losing negative delta and creating a bullish candle is positive. And the price, it gave a good opening trade in that context, with the order flow understanding. And then price hit a high. But you can see here that when you switch on the imbalance chart, you find that there is selling, uh, at the higher levels. When you find such imbalances, these are examples of passive selling taking place. You can see here that most of this delta of 23k, this candle has 23k of max delta. Almost all of it is here. So you can see 27k here. So if I have to zoom this, so yeah, so you can see. Anyway, I think it's visible. So you can zoom in and see that this is 27k. Most of it was at that level. That is the passive, seller. So it becomes a potential zone of resistance for the price. And you can see that throughout the day, price kept taking resistance around the same zone. You must generally treat it as a zone. When such happens, you can see passive selling, and price was not able to sustainable, and the final down move came. And through OI also we saw why this is happening. So when OI is confirming that this call writing taking place and put unwinding taking place, generally final up move will go for liquidity gathering. It would also be a fake out on the upside, and then the move heads in the direction which the OI tells. So this is from the OI context. I mean, yeah, and also you can see that the OI is pretty sideways. I mean, the order flow is very sideways. So again, hinting that not there's not much action, for the intraday. So there was bidirectional move for sure. The first half and the first part, and then sideways, and then the last part. So this the clue was for this was in the EOD data. Again, it's almost like a chain where you analyze the EOD data properly with the price, and then come to some logical conclusion. Then you analyze the intraday OI data. Right, this is how the chain looks like, intraday OI, and then you analyze the order flow, and then you come to one broad conclusion. So then the cycle repeats. So EOD data gives a broad clue of the smart money's positions. Based on that, you make a hypothesis that it can be a bidirectional, it can be up down or down up. So it could have been either of the case, but today the market took this course, and then accordingly intraday behaves. So we must expect that if this is the case, then there will be increased put rating in the first half and then increased call rating in the second half. If this is the case, then you should think that there would be increased call rating in the first half and then increased put rating in the second half. So that's how it generally plays out. And given the macro context also of the rising dollar index, so index became weak in the second half. So overall, that's it for today's analysis. The Nifty order flow is also similar. Nothing much to add. You can see that the price opened here and the price closed here. So again, a typical flat day. So hope this analysis was helpful. Thank you.